The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octo family? We are taking a look at some big cat places to go shopping online. Why? Because I think we're about ready to have breakthrough records. This is the quarter. Why? Thanksgiving, December, Christmas. Happy Merry Christmas to everyone early. Am I the first one to tell you that? I hope so. We're also going to go over some Sunday market prep. All right? So let's get into it. First one we're going to talk about is Baba. Alibaba. Anyone invested that or even know what Alibaba is? BABA. It's a ticker for me. Make sure to always search it. Alibaba. What's happening with them? Well, 10 days ago, they had earnings come out, and the EPS beat by 58 cents. Unbelievable. So Alibaba's last quarter smashes it. They did absolutely awesome. The non-GEP EPS was $2.65. They beat it by 58 cents on the dollar. GAAP EPS was $1.54, beat it by 6 cents. Revenue's up 30%, 30.3% year over year in line. That's unbelievable, man. Anyone ordered stuff from them? I have. Mobile MAUs on our China retail marketplace reached 881 million in September 2020, an increase of 7 million over June 20. So what's up? What's wrong with it? It's China stock. Not so good news, but that might create some good opportunities for us to buy. Because as long as nothing has changed with the fundamentals of business and everyone can still buy there, and it was just maybe some drama, it's probably going to be still good stock, right? Check out this bad news that's been coming out. This is from Seeking Alpha. Alibaba's single-day sales nearly doubled on last year's record. That's good. Chinese tech stock sell-off wipes over 260 billion after new antitrust rules coming out for China. Alibaba's single day dropped 56 billion in GMV during early shopping period. Alibaba shares drop as Chinese regulators consider new antitrust rules for online platforms. So even China's getting on it. You know, they're trying to backlash at everyone else right now. So there is always going to be some drama in that, and that's why some people don't touch China stocks. I don't blame them. You know, they are, just keep that in mind. They're a little bit more sketchy. However, created a decent buying in opportunity, if you ask me. Why? It's sitting right at what we're going to call support at 261.67. The white lines, I'm going to start calling those earnings lines. So those when earnings happen. You can tell on this one, the last earnings that came out, they were good, but right when that was happening, there was some drama with the antitrust stuff, and so I didn't know what to do. But a week before that, it dumped. All right. So starting on like the November 1st, I think that's when the antitrust stuff was starting to come out, it tanked. But then the earnings came out and it was really good. And it went up a little bit to 300. And then people were just get out of here. And they just dumped it again. But it's pretty much looking bottomed out to me at 261. Could it go all the way down to 222? Yeah, it for sure could. But I don't know. With what the quarter we're going into, people still going to be shopping online and all that? I don't know. Unless something dramatically changes in the market, I don't really see it. Look at these volume candles, by the way. Do you see that? Even the current ones are higher than almost the whole rest of the year. You see this just ramping up? That usually means stuff is going to go up. And this usually means, the big red means bears are usually out of honey. They're going to be head back to hibernation, which means the bulls are in control. Big C, talked about this one a bunch, talked about this last earnings. Here are just some of their customers that use them. Tons, right? Tons. Toyota, y'all heard of Toyota? Murad, Bliss, Reebok, Fujitsu, Ben & Jerry's. This year, they partnered with over 100 world-class new partners year to date with focus on market maker solutions and putting in place the right mix of choice for merchants of all sizes. So this is kind of like Shopify. Y'all might know what Shopify is. It's kind of a middleman for people that might have a site that want to sell stuff. So say you want to sell candles you make or something. You could build a site and you hook up with like Big C or Shopify, and they just take care of all the confusing add to cart, payment stuff, all that. But they charge you for it. Charge a percent, but that's how they make their money. It's known on the market that these big C is a little bit less money, costs a little bit less than Shopify. It's a selling pro, right? You want to pay 9% on the dollar, you want to pay 4 or 5 or 6. I don't know. Anyone actually use Big C for your website? Let me know. New valuations came out, new earnings came out. Look at it. It's heading up. That's what we like to see. Consistent growth is just going from Q2 to Q1. It's just consistently going up. 36 million. Last quarter was 40 million in total, partner services and subscription services. And then I don't know exactly how they charge, but I know they do some sort of subscription. So it's probably like a monthly thing, maybe like $69 a month plus X% of every transaction, depending on people pay. Big commerce gains bear at Citi on valuation though. So Citibank came out and said, here's a bear thesis. Citing the lofty, that's a great word, lofty valuation. Citi starts big commerce, BIGC is the ticker, with a sell rating and $65 price target and 11% downside to yesterday's close. Analyst Drew Foster, while growing into the lofty valuations is not an infrequent outcome for software IPOs, we project revenue growth rate will likely fall short of what is embedded in the stock at these levels. The analyst sees big commerce serving the small and mid-sized enterprise market where the company could face tough long-term competitive pressure. I believe that, that some of that's true. Some of that's definitely true. I don't know if it's, how are you going to price a company like this? That's my question. Because everything's not fundamental right now whatsoever. This is kind of a sad story here. This is showing that since August 20, Big C has actually done worse than the S&P 500. Big C has only gone up 1.45%, and the S&P has only gone up 6.97%. If you want to track it, but if you see these big red spikes, imagine if you were buying down here and you sold these red spikes up like 75%, 50%, 25%. Who wouldn't take 25% of their money any day of the week? And that's the low end. Got some more stuff. Big commerce prices follow-on offering of $68. This just hit Friday. Big commerce holdings is priced for the follow-on public offering of 1 million shares at a Series 1 common stock of $68 a share. Let's just say in the background they sold someone a bunch of shares for only $68. That's not good to see because that's on the lower end. They usually try to put it a little bit above where the stock is out, but they went pretty low on this. It's okay though. But market reacted to that a little bit too. Let's take a look at the chart here, which I really like. So take a look at what's going on. So we just had the earnings back here November 5th. See this white line? What happened? That day just tanked. The earnings improved. Earnings were good. It dumped. Back over here, we had earnings too. It dumped, but then it consolidated, dumped a little bit more, and then rocketed up. Dumped again before earnings. But as long as you take 10 seconds to look at the graph here, the chart, you can kind of see what's going on. Do you see these waves? We called this out back when it was down here. You could have written this up. If you calculate this out, if this goes to the reverted mean of where this is at, where this could be, where this is probably going to go, and goes to, let's call it $86, this is actually on the lower end of the reverted mean. So if it only goes to here, right? Just this right here. That is still a 30% on your money from where it's at today. Right now it's at $66, right at the bottom of this line. And if it only goes up to 86, it'll be 30% on your money. If it goes back up to where it was in October 17th, you're probably at almost 50% on your money, So, it's pretty interesting. Is this company going anywhere tomorrow? No, it should be going up. Why? Because again, it's December, right? Is anyone with me on this? They're not Shopify, but they're not priced like them either. And this is as low as we've seen it since close to IPO, back before September. Speaking of Shopify, King Daddy here. Shopify Inc. Shop is the ticker for me. So on Q3 earnings, it dumped. Then it went back up a little bit, and then the vaccine news came out. Remember that? How we were talking whenever that's coming out, a lot of these shop at home things or at home kind of businesses, at home technology companies have been going down. Just pay attention to the news on that, right? Regardless, we have a channel, right? We're sitting right at $918 a share. And this is liking the rally up to 1110. So if you are a long Shopify and you think you're going to have an awesome December and you don't think that we're going to get Hulk smashed by the end of the year, there's no reason why technically this shouldn't go up. Sitting at the bottom of the channel here. What do you think? Anyone already in Shopify? How do you play it? Perts? Anyone in Perts? P-R-T-S? Parts? Car Parts EPS beat by 4 cents. What is this? Online car parts. Like, they have a bunch of different sites. This is cool though. They sell a ton of car parts. Ever since March, people have been working on their cars instead of buying new ones. And instead of going to O'Reilly's, they're just ordering online. It's a little bit cheaper. A little bit better selection. Sometimes you can get better quality parts too. So how did the last earnings look? It looks great. EPS of 3 cents, beat about 4 cents. Revenue, 117.41 million, up 69.5% year over year. Beat by 25.63 million. Unbelievable numbers. And guess what? We're sitting at pretty darn low in this channel. We got a channel we're surfing. The last earnings, the day of, people just sold, dude. It's a smart thing to do right now. The market is still sketchy, even though it's still up. It's sketchy. So people ringing the cash register right now, it's a good idea. It just is. So, well, if you can't beat them, join them. If you're having trouble taking profits, just start taking profits. Set an exact time frame. When something goes up X amount of percent, 14%, 18, 11, 8%, that works. Take profits. Go for it. Regardless, take a look at this channel. Down to 960. We're up to 1125. There's no reason why this shouldn't go up. If it hits back to where it was, it'd be, let's call it 14 bucks plus. Does anyone see a reason why this wouldn't go up in December? People buying more car parts. There's kind of a curveball car ID. Does anyone even know about this? Has anyone ever bought anything from here? This is an actual SPAC. It's not even released yet. Not the new ticker. Ticker right now is LGC, Legacy Acquisition Corp, I believe is the name. Anyone ever bought anything from there? Link here if you want to check it out. Regardless, I'm going to say this is like a small car parts. Okay? So if you're in that one, you want another supplemental play, this one's cool, car ID. I've actually known about this one. I think I've probably bought stuff from them before. So that's kind of cool. They don't just do cars though, which is rad. So, they do interior lightings, repair, audio, automotive stuff. But check this out. RV camper, motorcycle, boating, power sports, tools, semi-trucks, outdoor recreation stuff. So right now they're in here at $46 billion market. They're looking to add another $404 billion covered market. They're not going to get that much money, but that's a huge increase. That's a massive, massive increase. 6 times. What was that, 6 times or something? The potential revenue for them, which is fantastic. Cool site too, it works. That's what the SPAC is going to do. It's going to help them open up more channels for the boats. And boy, boats, everyone ever owned a boat? It costs a lot of money. How's this ticker looking on the graph, on the chart? Sketchy. We're at the long-term last-ish end of the SPAC, and it's just been sitting around like 10. It only spiked to like 1130. SPAC's been doing bad as a whole. The sketchy thing is the SPACs is sometimes right after the ticker change, they just dump. I would personally, if I want to get long this company, I would wait like 2 to 3 weeks after ticker change. You could put in a buy way above it to try to catch it if it starts spiking up, Because the car parts people end up hearing about it, they'll probably be jumping on this one too, but they probably won't. Probably take them a long time. Why? Because these guys have done a terrible job at marketing. Terrible. So I don't see them coming out and doing a better job all of a sudden. So what I'm getting at, you might be able to get this one pretty darn cheap. Just watch it. If you want to get in, like I said, put a buy way above it, try to catch something. Wait for after ticker change. It will probably dump a little bit down to like 8-ish, I'm guessing. Then down there, maybe get it. There's also warrants available. I think like $1 right now. Take a look at those. SPY, what do we want to look at here? Dude, we're sitting at like the previous all-time highs from September. We're sitting like right there. Regardless, we need to stay above that, stay bullish. This last run-up we had, though, is just nuts looking as far as everything goes. Just absolute crazy. For sure, we should see some correction at some point. Who knows? It might just never happen, but I'm sure. Regardless, watch this, right? We've got the 358. We need to be bouncing around there. If this starts going below, let's call it 353, I think we're going to start heading all the way down to 339. Then from there, we've got another line at like the 330. So just watch that. As long as we bounce around kind of in here, though, 350 to 360-ish, we're fine. If we break above, and hopefully just keep going. Whatever. Keep looking at it. VIX, VIX, the volatility of the SPY. What I want to point out here is we are sitting at the bottom of the gap up from March, which is sitting at right at like $27. If you want to get into some of this as a hedge, this is a really good time to probably do that. Do you think everything's going to be daisies and roses until the next 5-6 months? I hope. I'm a positive person. I really hope it is, but realistically, I don't see it being that way no matter what. Which means that when there's volatility and crazy stuff going on, this likes to go up a lot. If you haven't seen my what to do when the stock market's crashing, watch that video. I go over different places to get in on this, but we're sitting like bottom of the channel. Pay attention to the horizontals right now. DXY, the dollar, dude, this thing's sitting low again too. Keep faking people out, saying ain't going up yet. Eventually, I'm a dollar bull. This will eventually be skyrocketing, but I don't think so anytime soon. I think we're probably going to just keep around here. Let's call it like 95 to 92. If we start breaking more and more south, the precious metals, Bitcoin will start probably going up. Pay attention to that. But if this starts getting above 94, the opposite will probably happen too. So keep your eye on this. A lot of times this will react before those. Speaking of reacting before those, watch this one. TLT, the bonds. The banks the ones in control, no matter what anyone tells you. When big money pulls out of others in a scared manner, they're going to start putting stuff in things like this, TLT, bonds, 20-year treasury bonds. You will see this usually react a little bit before you see stuff like QQQ react. So if you see all of a sudden some massive volume spikes and then you see this thing going up to like 165 again, might be good to pull out and get into some cash at that point. Because usually this will actually lead a little bit to the market. It's fast, but just keep your eye on TLT. Old big money that runs the market likes to jump in this. Keep that in mind. Intel, just wanted to bring up this. This chart is insane to me. Past 3 years-ish, we're at almost at the bottom. About $45, 42-ish is the low, 42.74. What I hear people say is the new CEO doesn't know what he's doing. They've been posting like a little bit of a loss, which is, can you imagine ruining a company like Intel? How do you mess up Intel, man? Like the biggest processor in the world, microchip. They're also losing Apple. Apple's got its own chip coming out, its new Air books or whatever they call them, Air MacBooks. And so eventually they're phasing Intel out. So that's a big deal. But time will tell on those benchmarks. So once the benchmarks come out on the new Apple laptopy things, If it's really good benchmarks, this will probably go down even more. But just watch this. I don't see it still breaking the 42. We still have a tiny little gap to fill, though, which is interesting. Right below it at like 41. You see this gap? From like 3 years ago, we never refilled it. So we could come down and tag that. I might be a buyer at that point. We'll see. Regardless, I think that's enough to at least get us a little bit prepped out. If you want more to be prepped out for these coming weeks, tomorrow, just take a look at my last couple videos I've done throughout the weeks. I've brought up a lot of interesting stuff and a lot of plays that not many people are talking about. If you haven't subscribed, please do it. We also got a Patreon where I slide you all deals. Got some more information coming out that's going to be late to them, but new to y'all probably beginning of next week. More plays to get in. Y'all take care and have a good rest of the day.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.